Okay, good afternoon. We're into Tuesday, which is normally when the week gets into its full swing. And yeah, you could argue that there's been a pretty nice move in a couple of assets today, but the market is very much in pause and breathing mode ahead of the midterm elections tonight. So the elections are going on all day today in the US as they wake up for their breakfasts. And yeah, we'll hopefully know. The view is that we'll probably know a little bit more about this come 3, maybe 4 a.m. in the morning. And yeah, perhaps for those of you who like to trade through the night, that might make for some very nice trades through there. Sadly, my kids last night have meant I shall not be up through the night tonight. Sleep is required. So yeah, I'll be looking at the fallout from these elections. Normally, the approval ratings aren't great for Biden, although they have had a little bit of a bump in recent weeks. But normally, the midterms do see a number of seats given back from the ruling party, and yeah, it'll be interesting to see what happens with that. On that note, who will run for the Republicans against Biden in a couple of years' time is very much up for debate. Mr. Donald Trump was out last night saying that he will make a big announcement on November the 15th. So circle that in your diary a week today. Trump at Mar-a-Lago is going to drop some sort of bombshell. He's likely coming back. Let's put it that way. So let's see what the market and how the market responds to that this morning. So let's, or the next week, let's have a look at what happened this morning on the DAX. We had an initial bit of weakness on the open. So at 8 a.m. we had that initial kind of sell-off. But quickly gathered back. We managed to move above this high volume node, got a nice little retest off there, and since then have kind of been grinding higher. I mean, the range today hasn't been insignificant, 130 ticks, but yeah, not maybe the most thrilling of markets for you to trade. We've had a lot of chop, especially in kind of correlating indicators, things like the dollar index. I know that's something we've been talking a lot about on our discussion group over the last few weeks and months. But certainly this week, these have been even a better correlator than the bond markets. And yeah, we've been very much in a range all morning, particularly since 8 o'clock. We obviously had that high up at 9, and really haven't managed to break out the lows that we had since 10. So yeah, it's kind of stuck here for now. If we do manage to break out either way from these patterns, I feel like that will potentially catalyze some moves in the stock market. That is something we definitely saw yesterday. If I kind of bring you through to this split screen between the range that we were in yesterday, just before 5 o'clock on the dollar index. We were kind of trading again in a very, very choppy after the open, not a lot really happening there. And similarly, I've got the Dow here from yesterday now. So we had similar sort of moves in terms of chop on the Dow yesterday as well, really from the open here. We're down at these levels, and then especially from where were we? Especially from about 3 o'clock, the market got very, very choppy indeed without too much happening. But it was really this catalyst move to the downside in the dollar. We had a big, big sell-off in the dollar just after 5 o'clock yesterday. And if you look at just after 5 o'clock on the Dow, that was the start of this big, big rally to the upside. If you've been patient enough to wait for that, even if you got at the end of that candle, you got the best part of 300 ticks to the highs. Just half an hour before the open, it's often the case that about half an hour before before the close, should I say, that these markets do start to get some profit taking, and lo and behold, it was that 8:30 print that was the high of the day. So yeah, always bear that 8:30 print in mind. You can get volatility. Sometimes markets do rally to close, but with the markets being a little bit more coy this week ahead of the midterm elections, not a surprise to see some profit taking late on in the day there. So yeah, interestingly, poised with the dollar being in a similar range currently today. Do we kind of get a breakdown here? Will that be the catalyst to give these stocks a little push to the upside? They had a couple of goes. The Nasdaq did kind of retrace from this high volume node a little bit earlier, but since then has regathered that level. So it'll be interesting to see what happens in 5 minutes' time. So on to the news overnight. We've obviously, I mentioned that Donald Trump is back. China's obviously reported 890 new cases of COVID. A lot of the reports of late of China have been that they are looking to get out of their lockdowns that we've been seeing in the region over the last, well, really since COVID. Their zero COVID policy has not allowed many people out for a sustained period of time. And we are seeing quite a lot of volatility in the dollar yuan, and especially around this kind of 130 time. We saw this on Monday as well. I can bring my volume profiles up. I can at least tell you which day is which. But yeah, really these things kind of get going about 1:30. A big sell off there on Friday. Similar action on the long side on Monday, had about 400 ticks up. And today we are seeing similar moves from about 1:30. Another, how far was this? Another over 500 ticks to the top of that move. So quite significant volatility in the dollar yuan. Like for those night owls, the market has been pretty kind. So yeah, do kind of pay attention to that market if you do see some news come through about the China COVID cases. As I say, Biden's approval ratings have dropped as Democrats brace for losses in these midterms. The Fed's barking was out yesterday as well, saying the Fed will stick to the task of curbing inflation. That is something that Powell obviously reiterated last week, that they're not done or not close to being done yet, and tried to really give a bit of shakedown to the markets because, yeah, we've been having quite a nice counter rally in stocks over the past kind of couple of weeks. Have a look at the S&P here as an example. The kind of rally that we had from the lows, really off CPIs first and foremost, but really since the start of the month, we've had a nice grind higher after that initial washout on the Fed itself. So yeah, this kind of move that we've seen off those lows of the CPIs last month brings me neatly onto what we're looking at for Thursday this week. So this, what on the Nasdaq at least was about 400 ticks. The S&P was about 100 ticks off in the first 2 minutes after the CPIs, but all the put options that were in play suggested that there was going to be a pretty decent cap on weakness on stocks. And currently there is so many more put options in play as well. We might see some sort of similar kind of turning action in stocks again. So yeah, don't be surprised if we do get a high inflation number, that we do manage to kind of undo some of those losses as we go forward. So yeah, that's something to bear in mind for this week. So for those of you who aren't aware, after the big day that is today with the election and the fallout through tomorrow, with that we have 1:30 on Thursday. We obviously won't be back with you on YouTube until after that on Thursday. So this is probably a good time to have a chat about it. But yeah, the CPIs have been the biggest mover, the biggest single day actually of the stock market this year was on the CPI numbers in September. We had a 6.5% sell-off in the Nasdaq on the 13th of September. And then we've obviously just had a quick look at the 13th of October. That's 400 ticks sell-off in the Nasdaq. That ended up being closing about 300 ticks up on the day. So yeah, that one was very much reversed, but we're getting huge volatility on CPI, and I don't expect this to be any different. The core CPI is the number that the Federal Reserve care the most about, rather than the headline figure. The core CPI removes food and energy because they are quite volatile assets, as we've seen this year. Oil obviously rallied up to just shy of 130, but has given all that back, and we're back in the $90 handle now. So yeah, that volatility obviously is inflationary when it's going up, but similarly it's deflationary month on month when it's coming down, and that has been the case the previous couple of months at least. And food costs as well are taken out for various reasons. Droughts, etc., can artificially or can put prices up with reduced supply, and similar demand prices will increase. So the Fed decide that to look under the hood a little bit more accurately about what they can control, they take food and energy out of the mix. So this core number is going to be crucial. They're expecting a 0.5 figure. The Fed were looking for a potential or looking for a sustained 2 months of declines in the core CPI number. And as we look back here, the previous month was at that 0.6 level again. We had that nice low print back in August, but then September's number was back at that 0.6 level month on month. We saw the same figure again for October. So if we do get a 0.5, that's halfway to their 2-month target of sustained declines. So yeah, perhaps that will be, maybe it won't be a down day in CPI for once, but we shall see. Let me take you over to the markets. We're just through the open now. The US markets are starting a little bit in the first 30 seconds on the back foot. Nasdaq looking a little bit soft. Similar action on the S&P. Dow's holding up relatively well. If we have a look at the indices today, we're not seeing too much change between really the Nasdaq and the Dow, about 0.4 and 0.49. S&P, the sluggish one, 0.26%, but very early days in the session. The 10-year as well is nudging up towards highs of the day. There's been quite decent correlations with this over the last few months, but I think the dollar index is really one you want to take a look at. At the moment, it's finding a little bit of support off those key levels. Let's see if we can bring my chart up to speed so I can tell you. So no, we're seeing the dollar index weaken a little bit. So for me, I think there might be a little opportunity on the long side at some stage in stocks. Certainly the Dow is seeing that already, albeit the US NASDAQ tends to be the one that leads the market with that kind of having the big names, the likes of your FANGs, your Metas, Apple. Well, Meta isn't that big a dog anymore, but the likes of Apple, Amazon, Tesla, Microsoft, Google, those boys are all in there, and they tend to kind of lead the market and drag it where it goes. But yeah, I would still be kind of keeping an eye on this dollar index to see if we are still selling off. We might get a turn in these stocks. So that's something I'll be eyeing up later on today. But yeah, we'll leave it with you. We'll be back in the morning on the Zooms for clients. If you haven't already signed up with us, please get in touch, and we would be delighted to invite you into our groups. So yeah, and if you also haven't clicked subscribe yet, the button's below, and yeah, you'll be able to be notified whenever we go live. So yeah, thanks for joining us, and we'll be back with you very soon.